Hey guys, how are you everyone? Are we good to go? Ashraf is here, Karim is here, the latest trends is here. He said he is a new subscriber, and if I can take a look at Ethereum, yes, I will look at the Ethereum as well. I have it on my list. Anis is here, Valerie is here. So I hope everyone is doing great on this Monday, that you had a wonderful weekend. So last week, as you know, what happened is the dollar has seen a very interesting rebound. It came after Fed, as you know, Powell, despite the 25 basis point cut on Wednesday, somehow he did not convince investors, markets in general, that they want to do it again confidently in December meeting. So there's a lot of issues, especially because of inflation, which is still trading around 3%. And that's something maybe that could keep them away from cutting further, especially they don't have latest jobs data either because of the shutdown, and that's something that we have to consider. So market is now repricing the earlier moves. Of course, the US yields, as you know, have been mostly trading to the downside. Here I'm looking at the 2-year yield, and you can see that we have been trading mostly to the downside. It could be some kind of wedge formation. So I still think, I'm still in the camp that the US yields sooner or later will stabilize and potentially turn to the upside. I'm not sure what can really trigger this kind of a moves, but I certainly do not want to force my views against the most probable wave counts. Okay, that's on the top of my list. So I still think that US yields could possibly make completely opposite moves, like everyone expected. Fed will just keep cutting rates. So maybe this pose is now the first signal that we really should be very careful when trying to predict further decline on the US yields. However, we are still not breaking this trend line resistance here, so I'm just wondering if maybe there still could be some kind of another push to the downside, and then eventually we recover. But from just pure basic technical perspective, that's definitely the pattern which we should be aware of, because normally it means that market, even if it's trading to the downside, could sooner or later come to an end. It's not only on the 2-year US yields. If you take a look on this one and maybe zoom out a little bit, what's the most important here is that that was a free wave drop. So even if we're just chopping around, we are still quite high on the US yields, right? So even based on all of these dovish expectations, yields overall are still holding up quite well if you look here on the big chart. So now when they are possibly on pause, I'm just wondering if maybe we are trying to bottom here at the lower side of this range. It doesn't mean that wave C of the potential triangle has finished here, but certainly it could argue that we will stay trapped in this consolidation for a bit longer. Also, if you where did this, here it is, if we take a look on TLT as well, I mean, there's a pretty straightforward wave count. If I try to label this as an important bottom down here, I would most likely broke some Elliott wave rules. So I'm still seeing just a sideways consolidation. So if US treasuries, the TLT itself, will really face some kind of resistance here, then we know what this means for the US yields and of course for the US dollar. But it doesn't mean that this will happen, that the dollar will rise straight from here. Even if we are seeing some kind of an interesting recovery on the dollar, we still have to consider what's happening, what's going on this from an Elliott wave and clear price perspective on this 4-hour time frame. Notice that we still see some kind of a overlapping price moves from September lows. So it's very hard for me to say that that's an impulse. I have some alternate wave counts that could suggest the same, but I will not go into details with this one because the short-term view is somehow very similar. What I think is that we could be running into some serious resistance just from a pure technical perspective here around 100.25, maybe even 101, where you see this upper channel line. So if I think that we are in a corrective subdivisions here now in late stages, then I certainly do not want price to break through the upper trend line of this corrective channel, because normally when you are at the end of the correction, either in wave C of a zigzag or maybe WXY, you will see that price will try to complete this whole corrective move somewhere around this parallel trend line. Okay, so if this one is broken, then we'll know that something else is happening. So I identified some potential resistance levels. Now everything is up to the market. Now what I want to see to confirm my wave counts, my bias, and that we will know for sure the dollar is going to resume lower, is if we see an impulsive sell-off from that area, from 100.25, 101, then we could say that weakness is ready to resume here into this potential wave 5. So you can see here that we are at a very important and key resistance levels. But as I said, we have some alternate wave counts. This ending diagonal that we talked about and called for a reversal months back in September is still actually somehow valid. Okay, but the fact is that this rise somehow, at least at this stage, is not really convincing. It's not really impulsive. But even if we see some setback and then maybe later on, well, I still would be then expecting some limited upside. And there is still, I believe, some unfilled gap from the beginning of October, and that's what could maybe turn this trend around if we see a fill and then later on rebound. But what maybe is also very interesting is that, as you know, last year in September 2024, Fed, after a while, Fed cut rates, then market resumed to the upside. Here again, after a pause, Fed cut rates, market is turning to the upside. So that's why I seriously think that we should not ignore the potential power of this ending diagonal or this wave count. But as I said, even this one could suggest that maybe we'll see some pullback. So let's say that I'm 50-50 here on bullish bearish scenario, unfortunately, but I believe that we will get some more useful price data and some confirmations maybe already this week. Now, if someone is also loving the candlesticks analysis, because monthly we are in a new trading month, well, this one is also something that maybe we should not ignore. Okay, it could be the morning star formation. You can see that was straight move to some very nice reversal here back in August, new low for September, and then in October we have seen a very nice push to the upside. So if we just keep trading to the upside and then finish the week quite strong on the dollar, then we will exactly know what to look for and what to expect. But it's interesting to add that stocks are still holding up quite well. So I'm just wondering what will dollar do if stocks would really see some very sharp, interesting reversal. Then we know the dollar could actually see much more upside. But as I said, the most important, for at least for me, for going into this week, is that we are coming to the upside still with somehow corrective price action. So I want to see what happens up in that potential resistance area. And also, if you look at the euro dollar, same scenario, a lot of overlaps here down from that high. And I'm comparing this length of a correction with the current one, and I came out with the idea that maybe 115 is something to watch for. So that's the pretty important level for this week. Also, as I've been sharing some wave counts on the smaller time frame with our members, said that we are coming here out of a triangle, and usually triangle will occur prior to the final move within a higher degree trend. So maybe we are now in final stages of this WXY correction. So let's see what happened at 115. As you know, it's Monday, and whenever Mondays are having just one directional moves, like for now it's continuation down from the end of the last week. Usually this Monday flows could be reversed on Tuesday, so maybe we'll see some kind of rebound, but it's yet to be discovered what kind of a structure we will get. But if we'll get any kind of a 5 waves up, I just think that then we will have some very, very interesting and beautiful price action that would most likely send us maybe to the upper side of this range. Also, looking at cable, this one is coming to the downside, but if you look here, maybe on a daily chart, we are at trying to break, retest, still testing this somehow, this swing supports. Also, it was some important level, the same level here back in April of this year when we were still below that level. Then we firstly fell away from it, then finally broke higher, retested it as a support. So I'm now just wondering if we can once again see this as a support. So looking at this wave structure that is happening right now, what we should be focused on is maybe this current drop down from September highs. For now, it's still in 3 waves. And the reason why I'm saying is that why we should focus this one, because no matter what the big picture is, the important is what this current lower time frame shows. Well, it can either be wave C or it can still be some extended black wave 3. So the key will be to recognize the potential structure down here around 1.3 level, maybe 1.3050. So if we are in wave C, if really we think that we are at the late stages of this counter trend movement, then that's the zone from where you should see a rebound. If this will not happen, but instead you will see the lower trend line support that will be broken, then unfortunately we should expect much lower prices later on. But because we are now at the potential supports, of course, I'm just aware of potential rebound rather than trying to turn bearish here after already such a big and deep retracement, which by the way still can be a counter trend movement. So we are not seeing any kind of a confirmation that we are bottoming, but if we'll see 5 waves up and let's say we rally back above the previous swing lows here from October, then this could be quite interesting, attractive for the pound. But for time being, even as I said, alternate scenario for ongoing bearish impulse is something that we certainly have to consider. But when it comes to potential dollar shorts, if let's say that I'm trying to discover what I would like to trade, if dollar maybe will really see a new reversal to the downside, well, I always somehow like the commodity currencies, especially when you have these stocks still moving to the upside, which somehow they ignore what the dollar, what the US yields do. I'm looking here at Aussie, and Aussie is now from a pure just price action perspective, it's very ugly pattern, right? But then if you're looking maybe this from an Elliott wave eyes, then you may try to define something very important here. So the most important is that that structure down here has been made by 3 waves, this part from a new high. So that was not in a 5 wave drop. Okay, so because that was a 3 wave drop, it makes me think that we are in a complex correction. So I came out with the idea that this could be a running triangle. Also notice that that rise has also been made by 3 waves. Plus we have some gap here from last Sunday around 0.6515. So that could be quite interesting support when the gap is going to be filled. Why this is lagging? Not sure. Anyway, so the reason why this lag to the upside occurred, firstly prices gapped higher because on optimism that deal between on potential positive outcome from between US and China, but now when Powell was under spotlight, then dollar came to the upside, and that's why Aussie reversed even lower here. But keep in mind that that last week everyone was just eyeing and waiting what Fed will do, what will Powell say during the press conference. And now when the dust will settle, everyone will try to focus on something else, and some other topics. Okay, so keep in mind that despite this current reversal on the Aussie that we are seeing, could be just still some temporary move, and I'm looking this to be a potentially wave E final leg of this triangle here. So as I said, maybe the first support to watch is at 0.615 65.15 level, and then obviously always very important in the triangles would be the lower trendline support. So the lower extreme levels for wave E potential support could lie somewhere around 0.6470, around there, right? So I'm expecting maybe a rebound here. Also inflation in Australia is, you cannot ignore it, and that's definitely something that could keep Aussie supported on dips. Looking at dollar CAD is also turning to the upside, not turning to the upside, but resuming higher after this dip. We were expecting a reversal here on dollar CAD from above 1.4, but unfortunately that drop has been made only by 3 waves. So we are now still progressing even higher. And once again, if you look here at this subdivision, somehow we have plenty of overlaps here, and we are running into this resistance here. Maybe still a room for 140-150, but up there, just be careful at the upper line of this potential corrective channel. Be aware, if we could see some kind of a reversal in 5 waves, then you will have a confirmation for a top. So whenever I try to define resistance levels, as I said already earlier, the most important is that you get confirming price action. That's especially important when you try to maybe look for potential opportunities. So if I have this one on my watch list because we are running into the resistance, I want to see 5 waves down, okay, on at least on a smaller time frames, that will not a drop that will last only for a day, but maybe 3 days or more. Okay, so if you will see bearish price action from a new high that will last 2-3 days or even more, and you will be able to count 5 waves down from that high, then you will have a confirming price action, and that's something that you want to see before pulling a trigger in the opposite direction of the market trend. Because keep in mind, even if I define the potential resistance, I obviously still can be wrong, and the wave count could actually change if the price action will still move to the upside. So there's a big difference between analysis and trading ideas. I can do a lot of analysis, right? I'm tracking a lot of markets, but maybe I will not find even one useful setup. So that's why for me it's important to find the proper wave structure and confirmed price action before pulling a trigger. Okay, so bottom line, we could be moving into the resistance, but we are waiting still on this confirming price action or confirmed top in place. Now let's take a look on dollar yen. Also very similar story. So we are possibly moving into some serious resistance around 154.70. It's the 78.6%, and then you have 155. Now this levels 153, 154, 155, all around figures are quite important, especially when they come quite close to the like this 78.6% fips. So I think that this is quite interesting resistance zone. But once again, even if I'm labeling this as an ending diagonal, it doesn't mean that I'm right. But I'm observing and patiently waiting for this reversal to show up. We have seen some reversal here that was a few weeks back. We even took some shorts on this one, but now when market is back to the upside, I want to see some new confirmation that we are really having a deal with the thrower formation here. So we are currently at the 61.8%, but I shared earlier with our members some smaller time frame chart, and this one still shows that there could be a 155 level tested, and then let's see what happens up there. But somehow of course I cannot ignore these unfilled gaps down there. I'm not sure if they will get filled, maybe I'm wrong, but somehow my approach is that it's much easier to trade when market turns towards the gap rather than away of that unfilled gap. Now let's take a look also also on this crude oil. So crude oil, as you know, it's been somehow sideways, and it's always somehow sideways. Okay, even there are always obviously a lot of volatility is going on, but somehow commodities in general will always come back no matter how far they go, unless you're looking at metals. That's different story. But look at like gold obviously, or silver. But looking here at crude oil and commodities that are important for production, of course, they will always come from one extreme to the other extreme. So here what I'm looking at is that we could be witnessing much deeper corrective drop, but unfortunately we are somehow now still trapped between these very big important levels, $55 and $80. So that's a range that maybe it's not yet to be broken, and the reason why I think that there is even a chance that we'll see further upside in the near future for wave B is because if you take a look here on a 4-hour time frame, you can see that we have this impulsive recovery from that low, followed now by somehow slow price action. So what I really like about this one is that after that very sharp rise, market did not see very sharp decline. Instead, it rose sharply, but now it moves somehow sideways here. And that's something you want to see when you try to identify the corrective price action. So because corrections are slow, impulses are fast. Okay, and what I really like is that this impulse is much stronger compared to the previous drop. So you have seen this big move that was made, this big rebound that was made in very it's much shorter time or period of time compared to this sell-off. And that's why I'm labeling this as either wave 1, maybe it's only wave A. So the idea is that we could stay trapped in a higher degree consolidation here, but at least third leg to the upside is missing. And even if you try to delete the wave counts here, okay, to make the chart much clearer, you can still see potential left shoulder, head, right shoulder. So that's your neckline that could be broken around 62 that I'm expecting, and that's something that could cause much more gains here. And obviously based on latest stories about oil outputs and regarding these sanctions against Russia, well, that's something that could keep energy prices supported, and as well, as you know, it will have very important impact on inflation. So if crude oil will rise, inflation will rise. If inflation will stick to around 3% or even higher, it means that Fed could stay on hold for a bit longer. Now, looking, since I mentioned this Fed and they could stay on hold, well, if we take a look on gold, you can see that this market obviously is booming for the last few months, but keep in mind that this market is always very attractive when there's a lot of uncertainty, geopolitical risks, or more importantly, when the Fed is on its dovish cycle. Okay, so you can see here this is the 2-year US yield. So always, and here at the bottom you have interest rates. So obviously Fed will cut if the US yields will move to the downside because they follow the market. And basically, if you just compare this price action and look from a distance, you can basically see that as soon as we have seen a reversal to the downside on the US yield and Fed started to cut rates, we have seen explosive moves to the upside on gold, right? So in other words, it's much easier to be bullish or define a bullish structure on gold when you see that Fed is definitely in a dovish cycle and that they are convinced they will cut rates further. But based on his latest remarks from Powell last Wednesday, basically there's a lot of skepticism, and it means that maybe they will be in pause. So if they will be in pause, it means that, in other words, it means that here we could just continue to consolidate right? It means that they will not move far away from the current from current rates, and in such case it means that we could see new consolidation on gold as well. Also for gold, whenever you have such an explosive move to the upside, everyone will rush into metals, especially because everyone somehow thinks that if stocks will suddenly, from any reason, doesn't really matter, collapse and move into a pullback, that gold will see very interesting new push higher. Keep in mind that there always, when there was some kind of a crisis, okay, financial crisis, whatever, COVID, even metals firstly sold off. It was a very strong push to the upside. So even if something happens in the world, I don't know what, but if will, even gold will still follow with the first leg to the upside, but it will be one of the first that will stabilize and then later on continue to the upside, while others could still retesting lower support levels. Okay, so what we want to see, what I want to see, is that now when everyone will just rushing into gold here, that we'll see a bit of more weakness, so that market will pressure them, put a lot of pressure on the price will put a lot of pressure on them, so that they will liquidate their positions, because if we'll see another 10%, 15% of a pullback from here, everyone will thought, okay, maybe this is really a multi-year top and we will try to consolidate for I don't know how long, and they will exit their positions. But that's exactly when we should be then looking for potential new opportunities. So from a cyclical perspective, it's not the best place to look for gold to own here. I just think it's much better to wait on some healthy corrections and wait on much stronger message from that should be delivered from Powell, that are really ready to cut rates. Because I mean, Powell said that their plans are still to bring the inflation from 3% to 2% target. I have no idea how they can achieve this if they will keep cutting rates. It's impossible unless they admit that 3% is a new normal. So now if we take a look also on gold, maybe on some wave count here, so that's something that I would want to look for. That I want to see here. Okay, so that big wave 4 of course could be very interesting to join the trend. You want something similar like has happened here in this wave 2, maybe even here a bigger correction. So you want something like this, you want this pose. Doesn't mean it will necessarily be deep in price, maybe just longer in time. Okay, and then you watch for a new cycle push to the upside. Also what is important as well is dollar Chinese yuan. So here I still think that this dollar Chinese yuan chart is saying us that we are here in a new bearish reversal, so it means that there is still plenty of room for more upside on gold. But at least in some shorter term wave counts for dollar Chinese yuan, it's telling us that we are missing here this latest part, some one more leg to the upside of this corrective rally. So if this dollar Chinese yuan will move to the upside, it means Chinese yuan will drop, dollar will rise further. That actually, it's not the best place to look again for potential opportunities on gold, on metals. It just means that metals, it doesn't mean that gold will drop, but it's much easier to find opportunities on gold when dollar Chinese yuan will be at the end of this correction rather than in the middle of this correction. Okay, but overall I still think that when this trend is ready to resume, that's when gold, silver could do quite well away and move away from their supports. Also, gold silver ratio, as we discussed last time about this one as well, it's very important to understand that whenever gold silver ratio moves to the downside, that's when we are in bull market on metals. But now what happened, we stabilized at this trendline support, we rallied, but rallied only with one leg. Corrections are made by 3 waves, which can be expected because that was a 5-wave drop and it's finished. And it could take us, the rally can take us back to the area of a previous fourth wave, which is around 89-90 area. So still plenty of room, maybe even time for this rally to resume. But it doesn't mean that it must be very deep rally. I mean, it's definitely too soon to say that that was all from a correction. I want to see something longer. As I said earlier, it doesn't mean that longer or deeper in price can be just longer in time. Okay, but of course I always somehow aim towards ABC structures because these are the most common in the markets. Now silver also itself, I mean, it's very important. You have 5 waves down, right? So because of these 5 waves down, once again, very important indication why we should be aware of these corrections on metals that may not last. But maybe the wave B can move all the way up to 78.6%, even higher, but that doesn't mean that new cyclical opportunities will show up. It could be still just a temporary rebound, okay, because we are just missing this, and we'll wait on this ABC structure rather than trying to find some opportunities within wave B, which means that any rallies can be short-lived. Now let's take a look also on the S&P 500. The S&P 500 is still in uptrend. We could be in wave 5 of an extended wave 3 channel, parallel channel resistance here, and 7K level is something to watch for. We have the RSI divergence as well, but if you look here on a smaller time frame, we don't have 5 subdivisions yet, so more upside this week could be expected. I'm quite surprised that markets are doing quite well here despite this somehow hawkish remarks from Powell, but at the end of the day they still cut rates. It means there's still cheaper money to be invested on stocks, so I'm expecting more upside. 7K, as I said, is something to watch for, and maybe we'll see some important resistance if we will be able to count 5 waves up into that area. Now when it comes to stocks, as you know, we have the US stocks in our beta version on our website wavetraders.com, and we updated some new single stocks just yesterday. So if you're interested, of course you may want to register on our website and just activate free access, and you will be able to find the latest updates for American Airlines, Adobe, PayPal was interesting last week, Amazon as well, Google, and others are updated. So make sure to check for more updates on these single stocks. But I still want to look at Amazon, because as you know, I've been looking and updating this one regularly and also covered it a few times here in our webinar. And as you know, we said that 210 was a very important support for potential flat correction where wave C moves to the area of a wave A, and this was basically almost on tick, and we are now flying away from it after strong earnings. But keep in mind that now when we can count 5 waves up to new highs into the 61.8% of this extended wave 3, well, despite this very strong push higher, well, there is a risk that we could see some retracement. It doesn't mean that this retracement will happen, but it's it was much easier to be bullish down here rather than at current levels with this kind of a wave structure, and especially when you have this unfilled gap. So if someone wants to chase markets here, well, good luck with that. I mean, it can certainly move much higher, but as I said, based on the wave counts and the risk I see, of course, you just should rather wait on a new free wave retracement rather than chasing the market up here. Okay, so some should rather exit here rather than taking some new positions. Also Berkshirehathaway, this one is also making still this retracement, and we see the price coming into the 61.8%. So that's now quite important timing, I should say. If we really are going to see a reversal higher, maybe that's the week when we can expect some rebound. But if you look, I have it here. If you look here, I certainly think that we are here dealing with this wave 4, and that is part of the higher degree bullish impulse. Maybe that wave 4 is completed as a flat, as I discussed in our update. Now let's take a look also very quickly for the end of this webinar, because I have to take my kid on football in 30 minutes. So here, Bitcoin. As you know, Bitcoin has seen a pullback. Cryptocurrencies are somehow sideways for the last few weeks. It makes total sense because a lot of investors, traders will somehow stay away from the market when you have a lot of volatility going on, especially after this very strong sell-off. So a lot of traders were liquidated. A lot of traders are now, investors are watching this market from a distance, and that's why it makes sense. It's not a surprise actually to see this kind of a price activity. But when looking here at these net unrealized losses called null, basically we are still not at the extremes where I would confidently say that Bitcoin is ready to rebound. Okay, so what we want to see, we need extremes in these unrealized losses, meaning a lot of traders, speculators that are involved in the market needs to be deeply in a losses. Then some of them will liquidate their positions, and then that could be potential extreme reading that will tell us that we are closer to potential support. So you can see that maybe ideally would be that we see a very sharp sell-off, maybe closer to 100,000, which was the swing support here back from June of this year. This could be very nice support, especially if at the same time there would be this data showing us new extremes here above October 16, 17 levels. Then we'll know that a lot of traders are in a loss and some of them would be liquidating their positions. In such case, we could anticipate that we will see a rebound. So what we want to see, again, we need more short-term investor that will start selling at a loss, and that's exactly what this data would show us. So if we'll see values below N1 indicate more short-term investors are selling at a loss. So we need something like this kind of a spikes, right? This could tell us that we are closer to potential rebound and supports on Bitcoin. But you can see that right now we are just not seeing any kind of extremes. So I will pay a close attention to this data, and if we'll see some sell-off on Bitcoin towards 100,000 and we see this data moving towards these extreme levels like we have seen here in the few months back, that's when it would be much easier to maybe to recognize potential bottom on Bitcoin. Also, my concern here is that looking at liquidations heat map, we are not really seeing any big orders on any of the sides. So it looks like that market is really unpositioned here and neutral, and this is something that could drive prices lower, especially from an Elliott wave perspective. If we consider that we broken this trend line, okay, we retested it as a resistance, we are now coming down. Also, head and shoulders top formation is something that we should be aware of. So I'm just wondering what could happen down here if we reach 100,000 level. I think that this could put a lot of fear into the markets, and maybe that is the next support to watch for. Okay, so I certainly from an Elliott wave perspective, I'm not interested in this one here, especially when looking at this short-term wave structure. I mean, it's just a textbook pattern that you clearly do not want to want to fake. Of course, there are some alternate scenarios as well, but based on a probability, well, I would definitely wait and not be surprised to see a break below 103. Now also on the Ethereum here, this one is somehow also corrective sideways. I'm not really sure if that's going to be an ABC, meaning WXY deeper correction, or maybe we'll see some kind of a triangle if this market will not break 3,500 level. Unfortunately, we are sideways, so not good price action maybe to trade in the near term, but it could be an interesting support if we see a drop towards 3,400. At the same time, if Bitcoin would really be closer to 100,000, then maybe this could be quite interesting for a rebound later on. But we have some coins that are moving on their own. I mean, as you know, here is Dash that's been moving very nicely lately, but keep in mind that we are now approaching this trend line resistance here when looking at log scale on a weekly chart, and also on the daily chart as well, the daily time frame, we can count 5 waves up. So be careful up here around 100. It's also around figure psychological level, and that's why we could see some kind of a retracement. And if this strong coin will see some pullbacks, then it really means that corrections could last a bit longer on cryptocurrencies. Okay, traders, I hope that you enjoyed this presentation, this webinar. Of course, if you are interested in more of our analysis, more of the updates, make sure to visit us at wavetraders.com. You will have a free access, as I said, to US stocks, and also we have paid services for FX, crypto, and FX. Obviously, we also cover a lot of other major markets as well that are important for the FX. Okay, traders, have a nice day, and don't forget to subscribe to our channel, press a like, leave a comment later if you're watching this recording, and hope to see you next Monday. Bye.